Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate with your host, Kevin Perenio. As an owner and C-level executive for 20 plus years in finance, KP is here to serve you with all of his knowledge and experience. Whether you're a broker, realtor, or just interested in the economy, this is the podcast for you. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Corona, California for the last time this year in 2022. Out with you, 22, and on to a new year. 2023 is happening here shortly. So this will be my last one and only video for the week. I did one last week and doing one this week, and I apologize. I'm overdue for a haircut and a shave. I tell myself if I put it off a little bit longer, maybe I save a couple bucks with all this inflation. But I can't help but harken back to the last TV show I watched. I don't watch a lot of TV. I do a lot of research and reading so I can try and provide value for you and help people make money and, you know, have financial freedom and all that kind of stuff. And but I did come out of TV retirement and I watched Game of Thrones. And of course, we just had the long night and winter is coming. Well, winter is here. Those are obviously references. And I couldn't help but think about it here at the end of the year when everyone puts out their recaps of the year, predictions going forward. And I might expand out to a longer time horizon. You know, I've been in the business over 22 years now, and we'll be 22 this spring. And with PRMG here at 12 years and almost 7 as a partner. And I don't know everyone's length of their career in this audience that watches on LinkedIn, but I can tell you it's interesting to watch these cycles. And it made me think of the Game of Thrones. You know, when you play the Game of Thrones, either you win or you die. Now, obviously, being the king or queen, as Daenerys was, the dragon queen, you know, it's not quite that serious here in the mortgage industry, right? So real estate companies and mortgage lenders, you know, they come and go. And what I've noticed in these cycles, in these fights for power, you know, after every reset like we just had, I mean, we are in a recession that really started since May, when home prices started to come down and rates really peaked back in June. We see a reset, and there are new entrants that get into the business. There are some that leave. And there are new leaders. Congrats to United Wholesale, Matt Ishbia, my friend, who bought the Phoenix Suns. Are you kidding me? It's freaking awesome. You know, how much cachet does this industry have? And we got 2 NBA owners now, Dan Gilbert for Rocket Mortgage. They own the Cavs. And, you know, we've got Guaranteed Rates got their name, I think, on the White Sox Stadium. We had a look, by the way, a few years back to put our name on the Miami Marlins Stadium because we have such a huge retail presence down in South Florida and all across the state. You know who you are. We love you. But we passed because we're not a consumer direct. And I think Loan Depot has the naming rights to that stadium. So, you know, regardless of who our competitors are, you know, we're in housing, we're in lending, and it's the American dream. And there's some real cachet with the leaders of our industries and, you know, seeing our names out there all the time, advertised. And so it's something to be proud of for all of us, although pride is a deadly sin. So I tried. Whenever the word pride comes to mind, I try and use the word honored. And it is an honor to serve. It's an honor to serve veterans. It's an honor to serve consumers. It's an honor to serve people and put them in homes. Because the American dream, despite what we're reading and despite the time that we're in this cycle, and it's just a cycle, just like the Game of Thrones, you know, it is still alive and well, the American dream. And people need a roof over their head. And we all know that housing is in a recession. And, you know, the worst may be over, but there may be some more pain to come. And but that's part of it. When you fight for your family, your house, you know, Baratheon or Targaryen or whatever your company is, PRMG, whatever you fight for every day, you're fighting for the American dream. And what I will say that I've noticed, the commonality that really runs throughout this game that we play here is liquidity and money. And I don't want to cheapen the American dream aspect of it because, you know, there's a spectrum of, you know, we're in it for the American dream. We'd love to serve all the way to the secondary market is cold, heartless, and unforgiving. And if you're watching the stock market, which I'm not a financial advisor. I'm not responsible for your losses, only your profits, which I'll get into some cool tips here in a little bit. You see that we are in the game of money and game of loans, as I saw on a t-shirt out there. I think the good folks at Simple Nexus put that out there. Simple Nexus, or my boy Josh at Shred Media, or maybe it was, Class Valuation, but it is a game of loans and it is a game of money, and we buy and sell money. And the loan that we do, the house that we help finance, is a mortgage-backed security, and fixed income securities are a safe haven, just as is the U.S. Treasury. So we buy and sell money, and we have a shrinking negative money supply because of the actions of the Fed to fight inflation. And that hurts interest rate sensitive industries like our industry. And so people in their relationship with money have a lot to do with how well they do in life, or with businesses, or certainly in our business. Some people are more aggressive with their money. Some people don't like to lose money. We've seen companies fold up tent, shut down entire wholesale channels, or some of the non-QM lenders not have enough liquidity and going bye-bye overnight. And more will be to come on that front. As you look at where things are going. January and February are not seasonally great months. Will this industry give back as rates have trended lower, although there's a little pause, but we think generally going into next year, there'll be lower interest rates, lower home prices, and as those two factors continue to converge, with a lack of supply and a growing wave of demand of people who are deployed, have diamonds, diapers, have debt, get divorced, take out debt again, downsize, and even death, the 7 Ds. They force people to buy homes and get into houses. And there's a lack of supply out there. And there's still a wave of demographic demand, especially for the first-time home buyer, that millennial age, whether it's 33 or 36, whatever it is. Home affordability is a big deal. Our administration and all the housing think tanks are really trying hard. We're all trying hard to serve our communities. As of right now, with interest rates high and home prices high, 80% of people under the median income cannot afford a house. And that's a sad state of affairs, considering that 2/3 of America almost own a home. It's called 64%. Split the hair there. So we have a mission. We have things that we've done very successfully in 2022. The first half was great. Second half was brutal. Next year should start to smooth out. But, that relationship that these lenders and people have with money, some lenders are out there taking on debt to stroke checks to buy production. Maybe that will pay off. That's a gamble, taking on debt. Some people are more conservative. We're very conservative here. We're holding on to our money. We're not in a hurry to be number one. And, money isn't free. So when someone takes on debt, they owe somebody something, and they better pay up. So they're going to cut costs and fire people, or they're going to raise margins for the people they brought on. And it might pay off if volume comes back. If the Fed meeting in February 1st or March 22nd, we finally get a break. But if inflation stays persistent above 4%, even though the Fed funds rate is right now between 4.25 and 4.50, we get another quarter raise. We're 4.50 to 4.75, which is higher than the 2-year Treasury, which, by the way, 2 years and 10-year yields have been going up, especially because Japan sucker punched us and raised their yield control curve up, to 50 basis points. And so there's competition for the game of money out there for fixed income securities around the world. And the U.S. dollar is the safe haven of the world, but it has weakened a little bit lately, and it impacts us here at home. So my prediction for next year is that it will surprise to the upside on purchase money, especially with larger loan amounts. Rates will start to come down and continue to come down as early as February 1st, no later than March 22nd, and we'll have a somewhat normal spring purchase season. Second half of the year, if we continue to go into a recession, which all the red flags say we are, if job losses come and we go into recession, that maybe rates will even come down further, and perhaps the Fed will cut rates at the end of next year, or maybe a year from now, which will spark, hopefully, at the end of next year, or maybe it's a year from now, the beginning of 24, a little bit of a refi boom. So that's prediction. We're grinding, we're working, we're busting our butt. There's so many different great lenders out there with great leadership teams that have different valuations on where they think things are going. You know, the 60-40 portfolio is back in vogue. It did better this year than just a straight S&P. So hopefully you've got some hedge puts on your portfolios, or you're going more fixed income. But in this business, grind, baby. Work, make the phone calls, develop relationships. I'm sorry I didn't get to everything I want to talk about. I just think that some of those things need to get off my chest here. Have a wonderful new year. 2023 is going to be better than we think. Have a great, safe weekend. Stay warm out there. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.